Welcome back to the second session on financial transactions in QuickBooks Online chapter. It's finally the time to record different financial transactions in the software. Before we move forward, let's go over what we will be doing. We are going to use ABC Corporation, a sample company, and look at its different invoices and documents. You will be the bookkeeper of the corporation and will enter these invoices and documents into QuickBooks Online one by one chronologically. This method will give you a real-life experience of how to record vouchers and invoices into the system. By doing it ourselves, it will be easier to understand how to manage these financial documents in QuickBooks Online. So let's get started. First, we will learn how to create purchase orders, record these transactions, and analyze their impact on financial statements. Beginning the process, your business has issued a purchase order to CMS Home Appliances, detailing an order for 5 distinct items and their specific quantities, dated the 4th of January. To see how to accurately record this transaction in QuickBooks Online, first click on the plus new button. Then in the section for suppliers, you will find an option for a purchase order. Click on that and it will open up a form for you to fill out. We will go through each field step by step to complete it. In the supplier field of the purchase order, enter the name of the supplier you're sending the order to. For us, that's CMS Home Appliances. Once you select them, you will notice that their email, mailing address, and shipping address are automatically filled in. This happens because we have already saved their details while creating the supplier's account. If you need to change any of this information, you can simply edit it right there. Now pick the date of the purchase order. Our order was dated 4th January 2024. Then there's the ship by a field. This is where you just need to write down how you're sending the order. This could be the name of the delivery company or the method you are using to ship it. But you only need to fill this out if it applies to your order. Next, let's add the details of the products you're ordering. In QuickBooks Online, if your order does not specify the quantity of each product, you will record it under category detail. But if your order does include quantities like ours does, you will use the item detail section. Basically, item detail is only filled if inventory is to be purchased. Since we have to add the quantity and the product details, we shall dive into the item details section. In item details, list each item in the product or service field. Don't worry about the description. It fills in automatically because we added this info when we created the inventories in QuickBooks. You can change the description if needed. Now, for each item, enter the quantity and rate as mentioned in the purchase order. You can add or remove items with these buttons. There's also space to include any messages to the supplier or extra notes about the order in the memo section. And if you have a digital copy of the purchase order, you can attach it in the attachments field. Once everything looks good, just save your work and that's it. You have successfully created a purchase order in QuickBooks Online. All right, to check your purchase order in the software, go to the expense section and click on the expense option there. In the transaction list, you will find your purchase order listed. Okay, let's talk about what happens in your financial statements when you create a purchase order. When you check your profit and loss account in QuickBooks Online, you won't notice any changes because of the purchase order. The same goes for your balance sheet. There's no effect either. This is because a purchase order isn't actually a financial transaction. It's more like a list of what you plan to buy, including the types of items, how many of each, and their prices. But it doesn't mean money has moved or that, owe or are owed any money. The financial transaction occurs later when the invoice is issued by the seller and payment is made by the buyer. Moving forward, on the very next day, the supplier CMS Home Appliances sent ABC Corporation the products and issued the purchase invoice. All the details in the purchase invoice are same as the purchase order. So let's add the transaction in the QuickBooks Online. To record the purchase invoice, there are 3 different methods: expense, bill, or purchase order. If you pay for the items right away after purchase, the expense option is the quickest way to record it. However, if there's a delay in payment, like you will be paying a few days later, the bill option is the better choice. It helps you keep track of what you owe and when to make the payment. Now, in our specific case, since we have already sent the purchase order and recorded it in QuickBooks Online, the most efficient method is to create the invoice using the recorded purchase order. This keeps everything nicely organized. So because we have already sent the purchase order, let's proceed and generate the invoice using that method. For that, go to the expense option. In the list of expense transaction, you can see the purchase order we created earlier. Click on the down arrow at the end of the purchase order and choose Copy to Bill option. This will copy all the details from the purchase order into a new purchase bill. Also, you can change any details if you need to. Now add the bill number IV0012, check everything, and if it looks good, save the bill. Once saved, you will see this bill in your list of expense transactions. All right, everyone, let's take a look at how this transaction affects different reports and statements. We will start with the profit and loss account. Now, when you check the profit and loss for the current period, you won't find the purchase transaction we just did. Why is that? Well, it's because when we buy inventory, it's not immediately recorded as an expense in our profit and loss account. Instead, inventory is considered an asset. In accounting, the cost of the inventory only becomes an expense when we actually sell that inventory. This follows the accounting principle called matching, where we record expenses. In the same period, we earn the related revenues. So that's why our purchase transaction does not show up in the profit and loss account right now. Now let's examine the balance sheet together. Notice how the inventory balance on the asset side has risen by $18,125. Similarly, on the liability side, there's a corresponding increase in accounts payable by the same amount. Now, if we turn our attention to the inventory valuation details, you will observe that the inventory quantity has been adjusted in line with the purchase bill. With this, we learned how to create the purchase bill through the purchase order and observe its impact in different reports and financial statements. This brings us to the end of this session, where we explored recording purchase transactions in QuickBooks Online, from creating purchase orders to analyzing their effects on financial statements. In our next session, we'll dive into recording expense transactions. Make sure to review today's material and come prepared. We will see you in the next one.